Welcome back, everyone. Today's video, I'm calling it the signals and the noise because there's a lot going on in the market and things are changing very quickly and going up and down, and there's a lot of emotions running wild and a lot of people saying things and the world ending and by the dip and a whole bunch of things. So I'm just going to go through a number of things that I'm watching for, I'm looking for, and what would make me think the things are over or getting worse or what. Now I wanted to start with this thought about death, taxes, and money printing when the market goes down. Those are basically the only certainties in life. Now, I say this kind of sarcastically, kind of cynically, I guess, if you will. But basically, the way that the market is set up, especially in certain regions of the world, especially in certain powerful regions of the world, especially in the most powerful region of the world, if you will, the way the the way things are set up and the way funding works for government, if you will, it requires the market to continuously go up. And there's a number of institutions and whatever that are, pension funds and whatever that need continual rises in the market because they face redemptions. They can't just wait for the market to recover. So there's a lot of stuff that needs the market to go up. And there's more reasons than that. But I'm just saying that a lot of powerful institutions and whatever need the market to go up over time. Otherwise, the problem gets bigger. Funding problems. So for those reasons, there's a lot of will behind the power. I'm not saying anything malicious. I'm not saying anything's corrupt here. Well, I'm just saying that the governments and big institutions and pension funds and a lot of stuff need the market to keep going up. So how does this people are conditioned to believe it's normal. Now, the point is that how do you stop a market from going down when people are scared and people are worried about saving money? Well, you print money and you shove it in the market, and that's what the Fed has done for a long time now. And my point with saying this now is that the other day, last week, they did some money, they did some repo, um, providing liquidity. And then this weekend again, they couldn't wait till Wednesday and they decided, you know what, 700 billion QE. So however much money has been printed, has been created to buy bonds and uh, provide liquidity, I think if the market keeps going down, we see more of that, and maybe in a different scale, maybe in a different way, because Mitt Romney, Republican, has been pushing for MMT, cash handouts, modern monetary theory. I would suggest looking it up if you don't know what it is, but basically wants to give people money, cash handouts for in this time of crisis. So that's more money, and that could go directly to the population. And that's one thing that if the money starts going directly into the real economy, I think we could start seeing some inflation, or at the very least, lagged inflation, or at the very least, not deflation. Now, I don't know how much it's going to do at this time where everything's shut down, but it certainly looks like it's coming, and in many places. Now, does that mean buy as much gold as you can get your hands on? No, to me it doesn't. I do have gold. I have a good quantity of gold equities at least. But I don't think you need to, even if you're betting on inflation, I don't think you need to own gold. Why is that? Well, gold isn't the only asset class that can benefit from inflation. It is, physical gold at least, is a way of betting on inflation that isn't directly linked to the economy, but presuming that the world continues, which, if you don't think it does, then investing's probably not the place for you. But presuming the world continues, real assets like real estate, even royalties on commodities, even commodities in general, and some businesses. Let's say you make TVs and TVs sell for $1 billion each. Well, you have your margin on that TV. Now, for complete clarity, and I'll get into this in a second, I'm not saying that this is just an extreme example. I'm not predicting that much inflation, not even close. But my point is, there's a number of assets that are based on future cash flow from actual things that are sold based on future pricing. So there's a number of ways to hedge yourself against inflation besides just owning gold. For clarity on inflation, because the word inflation can stoke a whole lot of different ideas from different people. I think that the central banks probably print money until we get some form of inflation. And I think they probably let it run hot because the global economy, I think, would benefit from inflation. Now, obviously, it wouldn't benefit from a lot of inflation. I'm not predicting anything near hyperinflation or anything like that. But it wouldn't surprise me to see another 2000s dose of inflation. And to a degree, I think if the central banks let it run slightly hot, let's say we get 3.5%, 4% inflation for a sustained amount of time, and the yields stay below 2%, well, that's actually healthy longer term for the economy, because right now everything is slowed down, or has been slowed down for a decade now, because of too much debt. So what is the way that the governments can use to inflate away the debt? Well, inflate away the debt. I just said it. Sorry. I was meant to phrase that as a question. Failed a little bit there. But the point is, we need more inflation than the interest cost in order to break out of this vicious cycle of too much debt. And for that reason, I do think that an amount of inflation that would be considered high based on traditional standards would be healthy. But I think that also means that it would be smart to hedge yourself against inflation in the investment community. And that might seem crazy right now because we're talking about deflation and the economy shutting down. But I think that a few years out, next time when the economy recovers and when we start getting inflation, the Fed is not going to want to fight it. They fought it last time and they broke things badly. So I don't think that I think they're going to be running scared for a while in terms of fighting any type of inflation that they could find, because they've been looking for it for a while and they do not want to break it once they find it. Now, obviously, if it goes too high, then I think they will. But if they get 2 or 3 or 4, 3.5% inflation, I don't think they're going to be fighting it in a hurry. Anyway, 2000 level inflation, I think, is possible. I don't think we're going to be in a deflationary world forever, and there's a number more reasons. Not in this video, though. One thing I do want to say, and I think it's very relevant in times like this, where there's a lot of things breaking and a lot of things breaking in a lot of different directions. I think that betting on sustained chaos is dangerous, and betting against every power on earth and markets to a degree, because markets have a tendency to fix themselves in one way or another over time. If the money is in certain areas, or if there's no money, it'll balance out. But my point here is that some people are betting on currencies exploding in one direction or another. But we just had the Federal Reserve. One of the things they did is provide dollar swaps. So basically, to hedge out to fight currency volatility, to make it so that currencies don't break basically in because of short-term supply and demand dynamics. So you had dollar swaps provided, and if we're talking about deflation breaking literally everything, I think that we're at a place where there might be we're looking more at endless liquidity, endless money being put in every place possible to fight deflation. So if we're betting on this happening forever, I doubt it. So don't get me wrong, I've been nibbling, I've been buying a bit of this and that here and there. But what I'm looking for before I really pile into the number of names that I like is for an end to be in sight, not of the world, but of the virus. And I think that China is past, for now at least, hopefully it doesn't return, but China is past the worst of it. And South Korea has also been doing some great containment, and their numbers are slowing. We'll have to see if they manage to to start declining, but I think it's looking like they will. Like if South Korea was the world right now, I'd be buying, because I think they have it contained. Obviously, it could go in the other direction, but it's looking good. So once I'm seeing that type, or once I think we're on a trajectory that will get to that type of containment and that type of decline in the virus, then I will be buying. But right now, and I'll get more to this in a sec, but there's a lot of people that aren't taking it nearly as seriously as they need to. And there's a lot of, I, I think I think that's what's freaking out the market, is that this could take longer because some people are not not getting it. So there's a lot of noise out there, definitely. When you go on Twitter, there's anger, there's conflicts, there's people getting pissed off at each other. It started a while ago, actually. It started like even before the virus. Like, well, I mean, that's Twitter. But in the early days, some people were saying it's the end of the world. Other people were saying it's nothing, and they were fighting each other. But basically, recently, there's some valid points being made on the very bullish side and very bearish side. And my point is that um, I'm also hearing a lot of stories. Like, I know there's different parts of the world where some crazy things are happening right now, and some can consider them leading indicators, and some could consider them anecdotal stories. So it's hard to not get caught up in that and look at the market signals and what the market is saying. But that's what I'm trying to do. I'm looking at what's going on in terms of some places as leading indicators, but mostly I'm trying to, right now, when it's hard, I'm trying to shut out the noise. So signals, what signals am I looking at? Well, I've mentioned a few in these videos recently. One is the CNN Fear and Greed Index. Now, this has obviously been extraordinarily bearish for a while, and yet the market has gone lower. So that's one, and that's one in isolation. Other sentiment indicators like AAII also getting pretty bearish. It wasn't as extremely bearish as I thought. Hopefully this week it will indicate that people have finally given up, but we'll have to see that tomorrow evening. So we'll have to see what happens in these last 2 days. But those are things that need to tie in with some other direct market indicators. For example, the VIX, the volatility index. I have thought for a while now that the peak of the selling would come with the peak of the VIX. I mean, the worst of the selling, which is why I kept thinking it's probably almost over when the VIX was at 60 or something, or 55 or 60. I'm like, this can't get much worse. A few days later, VIX 62 or 65. I'm like, okay, we've got to be almost done now. And then, a few days ago, VIX 75. one of the top four highest closes ever. I'm like, okay, it's gotta be close to the end now. It's gotta be. And then yesterday, the VIX closed at an all-time high, 86, 82.69, I think, would be a guess. But this is crazy. And every time I've bet on the top of the VIX by buying a little, trying to front run this peak in the VIX, I've just been slapped in the face. And eventually the VIX will go down. Eventually the VIX will go down a lot. But for now, it's hard because the VIX kind of warps the world in market terms. So like the higher the VIX is, the higher the range of possibilities for the markets. The VIX, by the way, is used in pricing of options, but it's basically how much things move up and down. So as the VIX becomes super high, nothing less crazy stuff is surprising. So that's why watching the VIX, I really hope it's done going up, but we can never know until after it falls. Um, but again, that's not, I don't, if you look at 2008, the VIX peaked in October of 2008 and the market selling finished in '09. So it's not the only thing, but it's one thing. Other things that I'm watching, yield curves. In the boring markets. I say the boring markets, I'm talking about bond markets. Yield curves, what are they saying? Are they inverted? Are they steepening? Yield curves actually steepen as the recession starting because it's pricing in future growth. So if the yield curve starts steepening a lot, and it has re-steepened a bit, I think, last I saw, yeah. If it steepens, that's a sign of where we are. And so there's a lot of yield curves and curves that I'm watching to see. Next signal, case growth, watching to see how fast different places are gaining cases and what they've done and is it working. I'm especially watching places that are slightly ahead of the curve and to see how they're looking. Also, how the market responds to both news and key levels. So does it go down on bad news or does it go up on bad news because everything's priced in? So that's kind of short term, another thing I'm looking at. And is it making new lows? Is it making new lows on higher volume or is it failing to make new lows? It's kind of, it's very short term and not something I normally focus on, but in markets that are this volatile and this correlated, it's something I have to watch. But this selling, this completely correlated selling, is it justified or not? And here's what I'll say, both. Because there's a lot of it that is justified because there's a lot of risks that have been ignored for a long time and that are peaking up. And so in some ways, much of the selling is justified. In other ways, some of the selling is not justified. Everything's been dumped along with what is risky. So the key, I think, is going to be finding what sectors are just being dumped and have strengthening fundamentals. And I think there are some out there that have strengthening fundamentals and are just being sold. And differentiating them from the sectors that are kind of grinding lower in terms of fundamentals, in terms of if you're looking for what is likely to recover first. Now, that said, I do think that there's been so much indiscriminate selling and so much carnage, if you will, that once we start to recover, once the market thinks the selling is done, or once we, go sideways or whatever, there's going to be a big move upwards for everything. And I'm not saying we don't go 99% lower first. I really don't think we will, but I just think that when the selling is done, there will be so much um, correlated move up in most things. When will the selling end? In here I'm talking about outside world. What outside world, real world economic indicators or events am I looking for to think that the market will stop selling off? Well, my guess would be that once the market thinks that enough has been done to contain the virus and we see what's on the other side. And I think that in some parts of the world we haven't seen that yet. There are many people that are being responsible and many people that are making sacrifices to stay home and not spread the virus. But there are many other people that are acting what I would call very irresponsibly, and I think that there's a number of partying or having fun that is going on. And I sadly don't think I'm exaggerating when I say that thousands, if not tens of thousands, hundreds of thousands or millions of people will die because of them. And I say this because if you look at how the virus spreads, if we keep the virus alive by a slow spread amongst those people, then it will get back to their families and then keep the economy shut down, or the economy will have to restart and spread the virus and it will kill a lot of people. And I don't think that this has hit home to many people yet. And I sadly don't think that they will realize how stupid they've been until they see it hit home. And it could either hit home by someone in their family becoming infected or hospitals being overwhelmed. And I really hope that doesn't happen. But with the amount of stupidity I'm seeing out there, it certainly looks like it will. And I really hope that we can find a cure or vaccine or something very quickly, but I don't think we're there yet. And if we don't get to that point, I think that we will probably need to see a complete shutdown, because whatever has been happening recently has not seemed to calm the markets. And honestly, based on what I've seen in terms of some places, what's happening, I don't blame the markets. Well, thanks for watching, everyone. I hope you enjoyed. Remember, none of this is investment advice. And well, that's all for today. Although I would be very curious as to what other people are watching for, what other people are hoping to see in the markets before it turns around. And if you have some ideas on that, please, I'd love to see them in the comments. I'd love to hear them. There's probably some great ideas out there.